So today is Tuesday, and quick video on the British pound to update from the one that I did yesterday. This is the daily chart, and actually what you can see, which is quite interesting, is that the daily we had this move down here, then it goes back up here, and is playing into that range. Basically, this area, which I'm going to draw. This area here is a continuation pattern to the downside. So the currency is in a range, and that range is about 100, 150 pip. So what do we do from there? What you would do if you are trading on the daily chart, you would wait for a break here of the dragon trend line at 1.5 5028. If you want to be more conservative, you can wait for the break under the 150 figure, which would be psychological. Now, another thing I would like to point out is that those trend dragon line that I've drawn, the blue one, they coincide with previous level of resistance and support quite nicely, and so that means that those lines are actually significant. Okay. Which is a good news. So there are two things that can happen. I mean, obviously this is still a down market for the British pound, no question about it. Doesn't show any signs of wanting to go back up. Two things can happen. The currency may want to retrace back here at 15427 level, which again, those were previous level, strong level of support or resistance, and that would be, if it did that, it would retrace back to the dragon trend line and the previous dragon resistance support line, but it wouldn't mean that it would actually stop the downtrend. This would be probably just a technical retracement. Right now, the strategy, or the best strategy for the British pound, is to buy or to sell on retracement. So the closest the currency is at 51.92. It's probably a good opportunity to look at a sell. Keep in mind that if it's broken, the currency could potentially want to play into that field here, okay, between 51.92 and 54.27, which you would probably range through that. Maybe not going to happen. CPI from the UK were released today, and did not really want to push the currency much higher. So that level, 5200, 5190 to 5200, is quite a strong level of resistance. So I would definitively recommend to look at an opportunity to sell either on the top of that range here, or wait until it breaks down that level at 1.50 28 or 1.50 figure. The downside, the next level of support from there is at 1.4811. That would be the next level, which is about 150 pip. So they're quite good opportunities. If you look at the daily chart, and the level are pretty much well defined. I mean, it's not very complicated. So from the break here, you have about 200 pip. The currency is ranging right now about 150 pip, and if it breaks up, it will go, there's another 200 pips there of possible retracement, but that would be quite a hard things to do. So if we go on to the hourly, what does that show us? Well, the hourly shows us pretty much a range possible that it actually would has a configuration to break on the upside. Right now though, unlikely. Let's see here, we put that here, changed it to green, so we know that this is the hourly. We're not so confused. This is the cluster of support on the hourly. Again, we would look at this level here as being significant, okay, but it has been refused 3 times already. It's trying to do it now once again. To break that level, there will be a lot of resistance at that level as well. So if you want to do a counter trend on this one, you can try to do that, maybe pick up 10 or 20 pip. What you would have if it actually breaks this level here, you would have today this is 30 pip to 80 pip on the upside before it actually may want to come down. Okay, if you want to wait for the downside, you would have to wait for that level here to break right here. Okay, and you would have is a 550 90 to the next level will be 50 20 50 30, so that's about 60 pip on the downside before it reached the daily trend line at 50.28 and try to break it down. But this morning in the US, right now, definitively the currency is trying to break on the upside for possibly a little retracement, or it's going to keep playing into that range here and potentially go back into the lower side. So if it breaks here, you can go into a long, but that would be a counter trend trade, so could be a bit choppy, or you can wait for it to reverse back down and try to get a opportunity on the downside, which the longer time frame sort of suggest the currency will go back down. And again, the entry are not so difficult to figure out. It's obvious that there is a fight at that level and at that level right now. So my suggestions, if you wanted to do a trade long, again, is to get it if it breaks 51.92, or wait until 52, and hopefully possibly try to play into this play field. This would be choppy, or forget about it, wait until it breaks and play into that field on the downside. Okay, so in any case, the cost of the trade, if you take it at the break here, you would need to put your stop loss below the previous trend dragon trend line. That is 122 pip. You could potentially reduce that to this level here under the trend dragon trend line, which is 52 pip risk. The upside, of course, if it goes all the way back up, is 230 pip. On the other hand, on the downside, if it breaks that level here down, the downside is 250 pip, potentially first level of resistance 50 pip later, and still the 130 pip risk. So anyway, the British pound, the level are well defined, and so you may want to look at some opportunities at that level. Let me know if you have any questions, either through the website or send me an email.